All right, guys, back to work here tonight. Hope you had a fantastic day out there. Hope you made some money on those juicy bull traps that we talked about in last night's video. But it's about that time of day, right? Time to get back to work. It's Wednesday evening. We're getting ready for a very big Thursday trading session. We have a lot to cover tonight. Got a bunch of ranges on the charts here this evening. Ranges are really easy to make money with. We're buying low. We're selling high. We're trading breakouts. A lot of ways to make money on Thursday. As always, I'm going to cover all my favorite trades in tonight's video to make sure you get a game plan to make some money tomorrow. Before we jump in though and get this party going tonight, got a lot we're going to cover in a very important video. Before we jump in though, make sure you subscribe to our channel, that way you don't miss tomorrow night's video upload. And if you guys enjoy the video tonight, do me a favor, will you? Hit that like button. I appreciate you guys tuning in and supporting this YouTube channel. But enough of the intro, right? Let's talk about the best trades setting up for Thursday. And I'll tell you, there are a lot of great trades on my radar for tomorrow. Ranges on the S&P, range on the Nasdaq, range on the crude oil. Now, ranges act like magnets. And so we're looking to buy low, sell high, trade failed breakouts. And if we can get some proof, we get some great breakout opportunities we're tracking here for tomorrow. One kind of interesting thing about all three of these charts is that they all have ranges, but they all have a little bit of a different spin to them tonight. So not only are there some great trades setting up for tomorrow, but you're going to learn a lot as you watch the entire video here this evening. So plenty of great money-making opportunities coming on Thursday. Now, speaking of Thursday, tomorrow is the last full day before we go into that non-farm Friday on Friday morning. So you really think a lot of traders now getting back to their desks after the holiday break. I have very high expectations for tomorrow morning in our trade room. Where are the big news reports coming in here for tomorrow? You know, we got some small stuff. You know, we got trade and jobless claims tomorrow at 8:30. I don't think those are going to be enough to really kickstart this market here for tomorrow. I think the big catalyst for tomorrow will be that Raphael Bostic speech at 9:20 Eastern time. We got the 11 o'clock weekly inventory report for crude oil, right? That's usually on a Wednesday, but Monday was a holiday, so it's pushed back to Thursday. And then we've got Bullard speaking at 1:20 tomorrow afternoon. So think about these as the big catalyst for tomorrow. Bostic speaks at 9:20. Petroleum status report, inventory report at 11 o'clock, and we get the Bullard speech at 1:20. The markets are obsessed right now with the Fed and rates and inflation. We heard from the FOMC minutes this afternoon. We saw how the market reacted well to that, and so we expect those to be the big catalysts here for tomorrow. One thing I would definitely keep in mind for tomorrow is because we have non-farm Friday on Friday morning, you know, be careful as we go into the closing bell tomorrow. You know, 3:15, 3:30, 3:45. You know, I always tell my students in the trade room, you want to be careful going those last hour or so of the day on a Thursday before non-farm Friday, because all of the big players will be sitting the sidelines ahead of that big number coming out on Friday. So relatively early in, early out for tomorrow. Just be careful that last, hour and a half of the day here for tomorrow. But looking forward to a pretty good day tomorrow in our trade room. Now, back to our charts though, because after all, right, the money is made on the charts here. Now, I'm going to cover all my favorite trade setups on Emini and the S&P, Nasdaq and the QQQs, crude oil and the USO. Make sure you watch all the way to the end of this video here tonight, because you will learn different trade ideas, different tactics, and I do try to save the best stuff all the way to the end. So I'll give you a reason to stick around all the way to the finish. Why don't we jump first here into the S&P 500. The SPY can also apply to this as well. Quick heads up on this. This, of course, is a tick chart. I always use tick charts. All of these charts will be tick charts. You can see the time frame in the upper left-hand corner. And also be aware, too, there'll be a lot of overlap between the S&P and the Nasdaq. They're always very similar, so just be aware of that. Whatever we talk about on the S&P can pretty much be applied to the Nasdaq and vice versa. So there are three key insights right now that are kind of tipping us off to where the best money making opportunities are going to be for tomorrow. First things first here, we still have that overall bear bias right now. So we're going to look at this through the lens of that bear bias overall. The second big clue here is a strong move higher. Anytime we see a strong move higher, we expect a pullback and a retest of that level. So we really have to give the buyers a little bit more of an edge in the short term right now here on the S&P. Now that is one big difference between the S&P and the Nasdaq. So you'll see here there will be some key differences between the E-mini and the Nasdaq here, but again with both ranges in play here. The third clue, and I think the third clue is the most important clue right now. We have a range. Ranges are magnets. Ranges are balanced markets. They love to rotate back and forth. They'll go up, they'll go down, they'll go up, and they should be looking to make that move roughly equal to the amount that we went higher. Now, the reason why I say that might be the biggest clue here for tomorrow is because, think about what this is telling us. If we have a strong move higher, if the buyers get what they want and pull up and retest that high right now, this becomes a major failed rotation. It's a really bullish clue. And so buyers definitely have a great shot here for a bullish breakout or an overall kind of bullish reversal on some of the slower time frames. So we definitely will be keeping an eye out here for a bullish breakout going higher. In situations like these, it's pretty straightforward. We want to find levels of support below the range and buy off the lows. We want to find levels of resistance above the range and sell off the high. That's the general idea of a trading range. And again, because of that strong move and the potential for this to failed rotation, there definitely is a lot of options here for us to trade some bull breakouts. So I'm going to cover both sides of this here tonight. So let's start first with the move going higher, right? Because in all reality, that's kind of what should happen right now. They should try to go back up and retest the high. Now, we can't exactly go buying breakouts yet. We're still overall bearish, and we're still going to range acting as a magnet underneath us. So the first thing I'm going to do is look for ways to sell this thing back down into that trading range. In this case, though, because we have that failed rotation, we have to respect these buyers a little bit more than we normally would. And because of that, I want to look for levels of resistance, again, up overhead. And ultimately, let's see if we can get these buyers to come in, get them to try a couple times. Because again, in this case, it'll be a failed rotation. It'll be a lot of momentum there for the bulls. Again, we're not going to buy that pullback right here. But if I can get these buyers to try a couple times, I can use their stops as fuel for that move running back down into that trading range. One of my favorite ways to trade a range-bound market is to wait for a breakout, let the breakout traders try a couple times, and then use their stops as fuel to run back up or back down into that trading range. So for tomorrow, as we go higher, I'm looking for those two-try failure patterns, right? We talk a lot about failure patterns and the two-try rule in the free trading course. So that same two-try failure you guys are learning in the free trading class. Now, a lot of times what will happen is they'll make that run up, they'll pull back, they'll retest that high, and then we can do it again, right? Look for the same idea here. Look for those buyers coming in. Look for them to try once, try twice, right? And then again, use those stops as fuel for that run back down. One of my favorite ways to trade these is when the market makes that run higher into resistance overhead, we then go in again, wait for those buyers trying once, wait to try twice, and then as we make that move running lower, we can then look for that new hidden channel off the low and look for that, or should say that trend line off the low, find that hidden channel, and then grab that trap right above the high. So think about scenarios like this, right? Ranges are magnets. We run up into resistance. Again, failed rotation, a lot of bullishness at this point and a lot of potential for the buyers going to break out. Not to worry. We're going to talk about about breakouts here in a moment. Let them try twice. Use their stops as fuel for that run going lower. And then remember, look at that little hidden channel. Draw it off the low. And then really, for the most part, any of the entry patterns, right? Could be a bull trap, like this example. It could be a buyer failure off the moving average, a pullback combo, all the same entry patterns that you guys are learning in that free trading class, which reminds me, I know that most of you guys have taken the free classes. You've learned all the, like for example, you've learned the failures, how to find channels, how to grab those bull traps. But listen, if you're here for the first time tonight, if you haven't taken the free trading class, what I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link and take that free trading course, because the strategy I teach in that free class will show you a simple trick to know where the best trades will be each day, and I'll show you 4 simple entry patterns to help kickstart you making money on your own account. If you're tired of missing the best trades right now, if you're not getting the results you want out of your trading right now, take that free course. It is perfect for someone trying to make the jump into full-time trading. And in that free class, you'll see a lot of examples of pops up, retest the high, trap in those buyers with the 1, 2, use their stops as fuel, and then again, grabbing that failure or grabbing that new channel and looking for that short back down, right? 2, try failure, and then again, maybe a bull trap, buyer failure off the high. One more thing you want to think about if we go higher here. One more here, and then we'll talk about breakouts going higher. Oftentimes right now, we're going to run up. We'll get that nice strong pop up, but we won't get the signal for the 1, 2 failure. Right now, markets are pretty volatile right now. The news cycle is really moving these markets around right now. So what happens a lot of times is it'll run up and V-top. If it V-tops on this, what'll happen is it'll come slicing back down and then begin to grind down like that. Like I said, we might not get like 1, 2 and then back down again. If we V-top up here, remember resistance levels, right? Range is the magnet. If it V-tops off that high, it's very simple. Don't chase it going lower. Simply draw a trend line off those lows, mark it up around that high. Make sense? Find those prior swings. Prior swings are where the best money-making trades are in range-bound markets. Bull traps, buyer failures. Again, you'll see a lot of examples of that stuff inside that free trading class. So those are 3, 4 different ways we can short this thing as we go higher. But like I mentioned earlier, boy, there's a lot of potential for a bull breakout. Now, it's still a range, and we're still overall a bear market. So even though there's potential for a bull breakout, we have to get what? We have to get proof. One thing we talk about in that free class I mentioned linked up in the upper right-hand corner is that we never trust a breakout, right? We never trust a range breakout. A lot of times range breakouts are very convincing, but then all of a sudden 1, 2, and they're right back down into that range here. So as we go higher, if I want to trade this on a breakout, they have to pull back to that moving average, and they have to what? They have to jump going higher, right? Get that nice strong pop as we go higher. And that, my friends, is what I call a 1, 2, 3 breakout. Now, promise me, you're not going to let those convincing breakouts fool you, right? We don't trust range breakouts until they show us proof. But once they hold that pullback and we get that jump off the moving average, now it's on, baby. Now we have a bull trend, and now I'm going to buy a pullback. I'm going to mark a trend line off the high. Very simple. Draw that trend line off the high, bring it down off that low, and again, in this case, look left, find some prior swings. Prior swings are where traps live. Try to get underneath the 21 moving average. That's where failures live. Failure into pullback combination, right? We talk all about these in that free trading class. That's the way you want to look at this for a range breakout going higher. Now, where is the target as we go higher for these? Whenever we have a breakout, remember this very simple rule. The breakout leg is the measuring leg. So we're going to watch the size of that breakout leg. Once we have that 1, 2, 3 breakout pattern, we take the size of the breakout leg and we anchor it off the deepest part of that kind of second pullback as we go. And that's going to project now. Again, I can't really get it on the screen here right now, but the size of that first breakout leg, that will give you a nice fine-tuned target to let you squeeze as much profit out of that breakout possible. We do have more levels overhead, 39.45, 4,000 overhead here. But again, think about that first leg is the measuring leg, is the breakout leg, right? Or the target leg. Now, one more breakout pattern as we go higher. Let's say, for example, we pop up. We don't pull back to the moving average and jump, right, with that 1, 2, 3 breakout. Now we begin to grind. Grinders are very, very common these days. We had one today on crude oil, right? So it pops up. Again, pops up. We're not going to buy up there. We can wait for proof. If it starts to grind and go higher, that grinder's a really, really big giveaway. I'm going to mark off that high. I'm going to find that hidden channel off that low. See how easy this is? Go out, find those prior swings. And again, you want to grab, as we always say in the trade room, you want to grab that first test. The first test is always the best test. And again, remember, first leg, third leg, that'll help you fine tune that exit. So now we've got a pretty good idea here. A lot of potential for a bull breakout here, but we'll see if the buyers can make it happen. Never trust the first leg. Never trust, right? Never trust those strong breakout legs. They have to show proof. If they don't, 1, 2, back down into that range. Okay, now we've covered the move going higher. Same stuff on the NASDAQ. Let's talk about now going lower. Right? Because in all reality, ranges are going to rotate. They're going to rotate back and forth. How do we buy it down here? How do we sell it down here? That's a great question. Why don't we grab a look at this one now on the NASDAQ? The NASDAQ and the S&P are very, very similar. There's one key difference, though, on this one, and you'll see right away here. On the NASDAQ right now, we still got that overall bear bias. We have a range pretty much right in the middle. And you'll notice what's going on right now. We begin inside the range, we run lower, and we try to go higher, right? Now, look what happened there. They failed that breakout, right? They failed that rotation going higher. That's a pretty bearish clue, isn't it, right? It's not a very bullish clue, is it? It should have been able to finish off that pendulum swing. Now, obviously, we had some news here today. So news, of course, probably played into the factor on that. But the most important thing now is now we end up down below the trading range. At this point now, as we go higher, same idea, right? Same setups we talked about on the S&P. If we go lower right now on the NASDAQ, and again, very similar here on the S&P, range is a magnet. What do? We look for levels of support, trend line support, swing support, right? We look for support levels underneath that trading range. Now, when it comes to going lower, what's the key? No, we don't just buy low. What we do is we wait for a breakout. We don't try to pick a bottom because those breakouts, sometimes they keep on going. We're not in the business of picking tops and picking bottoms. We're in the business of letting those bears try twice and then use what? Use their stops as fuel. So as we go lower, it's almost identical to the game plan we had going higher on the S&P. We take out some of these lows. We run into areas of support. We don't pick the bottom, we trap in the bears. Let them try once, let them try twice. Think about now where their stops are. If you're a seller and you get stopped out, you've got only one way to go, and you got to buy your way out. And that's why these failure patterns work so well in range-bound markets. Now, we talked about crown reversals in last night's video. I love it when we get right below that prior swing, right? So we run lower, we pull back to that 21 moving average. The bears try once, the bears try twice. If I can get a trap below that low, my goodness, that is one of my favorite trades here in our trade room. One try, two try for the bears. Again, stops are sitting right there, just begging to get hit. Don't be afraid too, don't be surprised too if it rolls lower lower or overall bearish, we may see the bears come in, try to pull back. They may retest the low. If they retest that low, as we say in our video class here at School of Trade, anytime we retest the low, it resets the count. And so once we retest low, same basic idea, right? Same basic idea here. If they pull back, retest that low, we now look to trap in those rookies, right? Trap in those bears. Let them try once, let them try twice. Use those stops as fuel. And don't forget, as we go higher, one of our favorite trades is to look for that new trend line, that new channel, and then again, drill down, grab that trap low, grab a bear failure there off of that low. So again, think about support levels, trapping those bears, use their stops with the 2-try rule, and then again, find that new channel, and then whichever one of the entry patterns we get, right? Could be a bear trap, like in this example, which is my favorite. It could be a seller failure pattern. It could be a pullback combo. There are a lot of examples of those in that free trading course. And again, like I mentioned on the S&P, we may see a V bottom, right? It may take out that low. We may not get those bears 1, 2 back up. It may simply pop back up and begin to grind going higher. These are pretty easy, right? Find that trend line, bring it off that low, drill down, find those, right? Find those prior swings. And again, swing levels are oftentimes where the best money is being made there, right? And again, I love bear traps for a trap entry there, or it could be a seller failure pattern off the 21 EMA. You guys will see examples of that in that free trading course, right? Because as we go higher here, we get back above or back below that 21 EMA, and what happens a lot of times is the bears will come in, they'll try to short that thing. When they come in to short that pullback, you've got their stops sitting right there, and you can hit them right there, right? So bear trap, seller failure, pullback combo, right? Any of the entry patterns we're looking at in that free trading course. So keep that on your radar. And then as far as breakouts go, right? Breakouts could easily happen here. Plenty of space below us if we see a breakout. Remember though, we don't trust breakouts, right? We don't trust that breakout leg, do we? I don't care how convincing that breakout leg is, right? I'm still looking for the failure back in. However, if the breakout can hold, right? If they can take out some of these support levels, if the bears can come in now, and one of the simplest breakout patterns, if they can hold that pullback and jump out of that range, right? Jump off that moving average. Now we call this what? This one's called a 1, 2, 3 breakout pattern. Pretty simple, right? Mark off that low, mark off that high. You got it. Find those prior swings, because that's where traps live. Get back above the 21 moving average. Get those buyers to come in and try to go higher. At that point now, it's a breakout. Find that failure into pullback combination. And then don't forget, where is the target on these? First leg, right? First leg, that's your measuring leg. And then pin it right to that high, and that will give you that kind of final objective on the move going lower. We've got a pretty good idea of where the market wants to go. Some pretty key levels underneath us here right now, but the breakout leg is what's really going to give you that fine-tuned exit to make it easy to squeeze out even more profit on that runner going lower. And again, don't forget, right, too, it may pop down and grind lower, right? If it pops and grinds lower, it's even easier, really, right? Because now you go out and find that low, you find that channel high, and again, without repeating myself too badly here, right? Grab that first test, is the best test off that high. It could be a bull trap, it could be a buyer failure, a pullback combination, and again, first leg, third leg, that will give you an idea there, right, for where the best targets will be as we go lower. So now I think we've got this pretty well rounded, right? One thing about ranges, and this, excuse me, this goes for the S&P and the Nasdaq. Stay out of the middle, right? Stay out of the middle. Wait for it to pop up, trapping those buyers back in. Wait for it to go down, trapping those sellers and back in. And again, we'll keep an eye out on the breakout patterns. What do you think, by the way, right? What do you think about this? Am I crazy thinking about a breakout right now? I would love to know your feedback. Hit me in the comments section. I'd love to know what you think about these markets here right tonight. I always appreciate hearing some different opinions opinions on my favorite market. So hit me up in the comment section. We'd love to know what you think about this game plan here for tomorrow. So ranges on the S&P, range on the Nasdaq. Why don't we wrap things up here right now with the oil? Oil is a very interesting chart here for us. And, as I mentioned, right, all three of these charts have ranges, but this is a very good example of a very different scenario, which has a lot of the same similarities, but let's talk about this. So first of all, there's a lot of key insights right now. You can see there's 5 different kind of clues here right now. It's an overall bear bias. We have that 60-minute bear bias. I think the 60-minute chart is kind of the perfect time frame to give you that directional bias. So again, we're going to filter this based on that directional bias. The next one's really important. It's a big move down. That's a pretty big move, right? It's not the biggest move in the world, but it's a pretty big move. And anytime we see a really big move in one direction, we have to kind of think that, sellers might be a bit weary to sell low down here, right? Whenever we see a really big move in one direction. Now, don't get me wrong. When we see a strong move in one direction, we look for a pullback and a retest of that level. So in this case, it's a really big move. We want to be aware that the bears may not like to sell this low, right? In all reality, look at this. We've got a couple days now. I mean, look at this move, right? Ever since we came back after the holiday break, it's a very big move down. So don't be surprised if we see a relatively deep pullback. Now, why deep pullback? Because sellers want to sell high, right? They don't want to sell low. And so whenever I see a big move down, I always kind of remind myself, hey, let's not get fooled by a really deep pullback, right? It's, again, there'll likely be a lot of bears up here around key areas of resistance going to sell this thing right back down again. Another important clue. Strong move retested. Now, we talk about this a lot on these videos. Anytime we see a strong move in one direction, right? Anytime we see a strong move down, we what? We expect a pullback, trap in the buyers, and a retest of that level. Anytime we see a strong move down, a pullback and a retest of that level. We call this mission accomplished in our trade room. This is important, right? Because now with the bears, they already got their retest of that low right now. So now we have to really get that deep pullback. And I'd like to trap in some of these buyers up here, get them to take the bait for that reversal and sell it back down again. Anytime I have a strong move that's already been retested, I know that there isn't as much aggressive sellers in the market anymore because they already got their retest. Now, we've also got a range going on right now. This is a very, very important clue. You'll notice here it's a bear market. It, of course, took out that same level we talked about in last night's video, right? That 73.50 area. We mentioned this as the key target in last night's video. It's a bear market into a trading range. Now remember, ranges love to rotate. So as they break out going lower, what's going to happen if the bears fail to keep this party going lower? It's going to want to snap right back up. When they snap back up, this becomes pretty bullish, right? When we rotate off the low, or as we talked about on the S&P and the Nasdaq, rotate off the high, it leads to a lot of momentum. So think about this. These are two really big clues. One is that big move down. We're anticipating a deep pullback. Okay, that means momentum will build for the buyers. The second thing is that range with rotation off the low. These oftentimes produce big reversals. And although I'm not expecting reversal yet, I do want to keep that on my radar here for tomorrow. The pop and grind channel is a great example of finding good levels of resistance. We draw trend lines off the lows. We pin them up around the highs. Then what do? We find resistance. And we look to short those pullbacks, right, off those resistance levels up above the top of that trading range. So let's talk about this right now because there's a lot of potential here for a deep pullback and a really nice short going lower. This will be very similar to what we talked about on the S&P. as we get that deep pullback, as we get that rotation off the low, we're getting up into key areas of resistance. I like that. But again, a lot of potential bullish momentum on this. This is exactly where that 2-try rule comes in handy. Let them try once, let them try twice, use those stops as fuel, and sell back down with that 2-try failure pattern. Don't be surprised if it pulls back, if it retests that level, and then we get the 1, the 2, right? Oftentimes what will happen is they'll make that deep pullback. It's enough momentum strength for the buyers. They'll buy the pullback, they'll retest the high. Remember, anytime we retest the high or low, it resets the count. 1 try for the buyers, 2 try for the buyers. Stops are sitting right there. And then again, the range is the magnet. As we roll back lower here, my favorite entries, find that new channel, grab that trap high, right? And don't miss that first test off the high of that channel. So very, very similar stuff we've talked about on the S&P 500 earlier on in this video. Or let's say, for example, we pop up really deep pullback, right? Real deep pullback. It would make perfect sense. We've spent 2 days going lower here. It would make perfect sense to see a really deep pullback. Now, we don't get buyers coming in here once, twice for a failure. Now, what happens is it slams right back down because, again, we're overall a bear bias. When that happens, when it V-tops like that, don't chase it. Find that new channel. You got it. Drill down, grab those prior swings. And again, I'm going to try to keep it simple here right now. Could be a bull trap, could be a buyer failure. The goal is I want to sell high, right? I don't want to sell low as we're going back lower here. Does that make sense, right? So we pop up, we don't get the 1, 2 back down. It pops up and it kind of V-tops and grinds down like that. It's the same basic technique I'm using right here to find that channel. Right? This is just a major version, and this, of course, is a minor version or a micro version, right? Markets are fractal. The same techniques we use in the short term can be applied in the longer term. Hopefully that makes sense. Now, we also know that potentially here, right, that rotation off the low, what if this thing keeps going? Right? At what point do we call this a reversal? Well, the easiest one is a pop-up, a pull back to the moving average, and a jump, right? If they can jump off the 21 EMA, 1, 2, 3 reversal, right? And we watch out, mark that high, mark that low. That's a pretty easy one, right? Drill down, find your entry off the low. Again, I won't go over all the details here once again, but again, you're going to see examples of the traps, the failures, the pullback combos inside that free trading class. Remember, first leg, third leg, that'll give you an easy objective going higher here. Or maybe we pop up and we get a short squeeze, right? Let's say something happens overnight. Who knows, right? OPEC says something. Who knows, right? Something happens in Russia or Ukraine, and the market pops up and starts to grind and grind and grind. These can be a bit frustrating, right? Because I can't buy it as it goes higher. It's too bearish right now. You know, you're buying very high at that point. If you're buying at that point, what I can do though is mark off that high, mark off that low. You got it, right? You got it. Go looking left, find those prior swings, and don't miss that first test off of the low here, right? Buyers would love to get a reversal, but again, we're so bearish right now. We want to get it up, trap in those buyers who are trying to predict that reversal and sell those stops. If they keep it going and the market separates and grinds off the 21 moving average, well, now we know, like it or not, that is a bull reversal, and we don't want to squander the opportunity to make some money off of that low. You have to think right now, if the buyers can get a reversal, you've got that same range we talked about, 79-ish. But you got to think this area right there, right? This 77 area, if the buyers can get their hooks in this thing, you got to think that's going to be a really big milestone there for those buyers. Take out that 77 level here for tomorrow. Remember, first leg, third leg are the ones that you want to use for those targets. The next big question is what if we go lower? What if we keep on going lower here? If we keep on going lower, we pretty much are waiting for that pullback. Again, we're now about 2 days now of really, really big move going down. So wait for that deep pullback, trap in some of those buyers, run it back down, right? Wait for that deep pullback, wait for that V top, right? Find that hidden channel, the same stuff, right? So if we keep on going lower here, right? If we keep going lower here right now, I'm not going to chase it going lower. Just wait for that pop up, because it could easily head fake going lower and then pop back up again. Because again, we're going on 2 days here right now of that big move going lower. All right, guys, we're waiting for a nice deep pullback right now in the oil. Keep an eye out if that deep pullback turns into a full-blown reversal. And boy, speaking of reversals, here's a scenario I like to look for in the trade room. Let's say, for example, we get that pop up. The buyers come in, of course, right? They try once, they try twice, and we get that short back down to retest the low. This range is still a magnet in this situation. Can I buy down here? I can. But what do we have to worry about? Momentum, right? Momentum is very bearish. So what do? You trap in those bears, right? They want to go back to retest the low. This is a horrible spot to be a seller. I know we're bearish, but we don't want to sell low. We want to sell high. So if I can get some rookies to come in when they retest that low, 1 and 2, you got it. Light those stops up for a nice short squeeze off of that low. It can be simple like this. It doesn't need to be complicated. Follow that momentum. Look for those shorts off resistance. We know that anytime we see a strong move, a big move, they want to go back and retest the low. If I can get some rookies or some inexperienced traders or some just more too aggressive short sellers there, I can buy right into their stops for a run back up to take out those highs. Right, guys? What do you think about this? Right? Am I crazy looking for that reversal? What do you think? I would love to know your feedback. What's your game plan? What do you like? What do you not like? Let me know in the comment section below, because I always appreciate hearing different viewpoints on our favorite markets. So hit me up in the comments if you got any questions, or if you got any feedback or some different ideas here on the oil or any of these markets that we talked about here tonight. All right, wrapping the video up tonight. Thank you so much for tuning in and watching all the way to the end. I'll tell you right now, if you are disciplined enough, if you are dedicated enough to watch all the way to the end of this video, you will do very well with us in our trade room. We open up 8 o'clock Eastern time tomorrow morning. I would love to see you there trading right along with me. So wrapping things up here for me, thank you so much for tuning in. Don't forget, I'll put all the free course information, all the membership information, I'll put all of that, the description of the YouTube video. Don't be afraid to call the office if you have any questions. We also have live chat on the website as well. So don't be a stranger. If you need help, get in touch. I would always be happy. I'm always here to help out with any questions you might have along the way. On that note, though, we'll wrap things up here for tonight's video. I'll see you tomorrow morning, 8 o'clock Eastern time in our members trade room. If not tomorrow morning, we'll come back tomorrow night and we'll get ready for Non-Farm Friday. Guys, my name is Joseph. Thank you so much for tuning in and watching all the way to the end. Now get out of here. Get some rest. Be well. Be nice to each other. And be here next time. Adios, amigos. Bye-bye for now.